In this lecture, I'm just going to explain about what are the difference between debenture and equity. So at the end of this session, that you will be able to understand the meaning and the difference between these two, like shares and debentures. So first of all, what is shares? Share are units of equity, ownership interest in a corporation that exists as a financial asset providing for an equal distribution of profit in the form of dividend. What does it mean? It means whenever there will be a profit to the company, the profit will be distributed among the shareholders in the form of dividend. And shareholders may also enjoy the capital gain if the value of the assets, company assets, raises. It means that whenever there is some capital gain, maybe the selling of company's assets, and the company have received some profit out of selling, and thus that profit will also be distributed among the shareholders, and that profit definitely will belongs to the shareholder, because the money which was collected from them, that was invested in buying and acquiring the assets. Now assets value has increased and they have sold some assets, and by selling those assets, if there is a profit or a gain, and then gain definitely will belong to the owners of the business, and shareholders are the owner of the business. So capital generated by issuing of share is known as equity finance. On the other side, debentures. So debentures are just like a loan which is taken by the corporation. So debentures are the debt instrument used by companies and government to issue the loan. The loan is issued to corporate based upon their reputation at the fixed rate of interest. There may be a fixed rate of interest, maybe like 5% or 7% or a 10% or 12%. It all depends on the corporation to decide what will be the rate of interest will be given to the debenture holders. And there will be some maturity period for the debentures. Maturity period may be that after a year or a 3 year or a 5 years. Right? So capital generated by issuing of debenture is known as debt finance. Now what is the difference between shares and debentures? So shares are owned by the corporations, and the shares are the company owned capital, you can say, and the debentures are the borrowed capital. So it means that the shareholders are the owner of the business, and in this case, debenture holders are not an owner of the business. And what is the shareholder and debenture holder? The person who holds the ownership of shares are called a shareholder. On the other side, the person who holds the ownership of the debenture is called debenture holder. So it means that the shares on the liability side of the corporate balance sheet, we will write share capital, right? If the person who has bought the shares will consider as the owner, but on the other side, that the debentures will be considered as the creditors for the corporation. If there is a profit, the profit will be distributed among the shareholder in the form of dividend. But on the other side, if the debenture holders are there, they will not be liable to get any profit, but the fixed rate of interest which is decided at the time of issue of the debentures. So debenture holders will get interest as the income, but that will be the expenditure for the corporation. Shareholder possesses a voting right, but on the other side, debenture holder do not possess any voting right, and shareholder cannot be converted into the debentures. It means the share cannot be easily converted into the debenture, but on the other side, debentures can be easily converted into shares. What does it mean? It means that if someone having the shares of the company will be considered the owner of the business, right? And owner of the business, that they want to convert those shares in debenture, that is not possible. But on the other side, the outsiders, any people having debentures and have given money to the company, they can convert the debenture into shares. It means they can become the owner of the business by converting the debenture into shares and can become the shareholder instead of debenture holder. So what we have learned in the small section, we have learned the difference between the shares and the debentures, and also what are the meaning of these two.